Well, joining us now to discuss the governor's decision within the broader context of South Africa's monetary policy trajectory is Dr Iraj Abedian. He's the Chief Economist of Pan Africa Capital Holdings. Dr Abedian, of course, no surprises. This was not a surprise move. Everyone had anticipated what she would be doing.
Absolutely. I mean, on the back of the previous decision, on the back of other structural blockages in the economy and massive cost increases, it's very predictable.
Now, of course, the last rate cut was in July. Some economists have said that the hold could signal, that she might or leave the door open, as it were, for a future rate cut. Do you agree with that sentiment?
Absolutely. Monetary policy, always the door is open. If things get bad enough, you have to go into emergency mode. But sincerely, I hope not. It's quite clear that the drivers of our growth no longer lies with monetary policy. It's all entirely in the hands of the public sector, and more specifically, it's in the hands of government efficiency and clean implementation, as the IMF calls it, the quality of fiscal management. Translated means do it on time, in good time, without corruption.
Now, of course, the question of monetary policy has to be situated within the broad macroeconomic policy choices that South Africa makes. Now, we know that the ruling party is in an alliance with organised labour and, of course, also the South African Communist Party, and there's been intense debate about what role monetary policy should play and whether it should, in fact, be in line with government's industrial policy action plans and also the new growth path. And the criticism from the unions is, in fact, that fiscal conservatives are in charge of monetary policy, which makes it very difficult for government to actually roll out, IPAP and so on. Do you share that view?
I think if we check the facts, not the ideology, if we check the facts, there is very little fiscal conservatism left in the past few years. In fact, some would argue that government fiscal stance is becoming more and more loose at the same time that the monetary policy is also loose. That wouldn't be an issue if the quality of fiscal spend was improper. So I think the issue is not so much about aligning monetary policy and fiscal policy. In my view, the monetary policy must stay put where it is. Now the focus politically should be on the implementation of fiscal commitments to, not talking about, implementing our infrastructure spend so that we unblock the hurdles to economic growth. No longer interest rate is a block to growth. Even if you wanted to invest at 2% interest, where is electricity? Where are roads? Where are municipalities? Where is the quality of education? So interest rate, even if it's zero, those blockages are not going to allow and facilitate investment by the investment community.
Now, the decision by the governor obviously has to be seen in its broader context globally. Many emerging markets have taken similar steps in terms of lowering interest rates to stimulate growth against a background of global economic crises. Is the decision of the Reserve Bank governor today in step with what other emerging economies are doing, particularly off the back of infrastructure rollouts?
If we did not have the blockages that I mentioned, then I would argue that yes, monetary policy possibly is a bit too tight. You can go down another 100 basis points, but that's about it. But as I mentioned, focusing now on monetary policy, loosening it further when other blockages does not allow growth and job creation to take off is an academic debate, mostly ideological, nothing about the practicality of investment and growth.
Now, of course, the whole issue of South Africa's labour relations has come under sharp focus, and of course the MPC did have to look at the issues around Marikana and the larger questions that it raises. And in fact, the governor herself spoke to those issues during the question time after her announcement, speaking to the issue of a potential, re-look at its labour relations policy, conditions of miners. To what extent, Dr. Abedian, is that going to become something that needs to be addressed if South Africa's structural impediments in the economy is going to be, looked at with the view of loosening up?
Yeah, I think we need to unpack that also. That we have to revisit it, absolutely no doubt. We have to do it, but when we revisit, we got to separate issues. One is the labor relations and the efficiency of it and the pro-growth or anti-growth nature of it. The second one is the extent to which the entire union structures have been thrown into a bit of chaos. As Mr. Wawi mentioned, the whole binding effect that once upon a time, a couple of years back, our industrial relations within a particular act had, suddenly has been thrown out. Even when you engage in and sign a 3-year, a 4-year wage agreement or a 2-year agreement, it's not binding on anybody. And that has got to do with the legitimacy of the union, over politicization of the union, which is supposed to protect the workers, that now they are protecting political fractions. That's a part of this relook that we do.
Now, of course, the whole question of whether inflation should be the only thing that the Reserve Bank should be concerned about has also come under discussion, particularly against South Africa's developmental needs. The Reserve Bank governor isn't deaf to those kinds of concerns. She has spoken about being alive to those challenges. To what extent is the latest move in line with her, understanding that our big issue in the economy at the moment is to get employment up?
I think she's been very alive to it. She's in fact acknowledged, as a matter of fact, the Minister of Finance has acknowledged in an open letter to the governor that yes, we got to be mindful to the employment capacity, but we also got to acknowledge, as I've said many times now, that it's not the monetary policy that's the impediment. The impediment are those real issues of either legislative nature, institutional nature, or structural, infrastructural state that the state talks about but does very little about. And unless we unblock those, we cannot further unpack the role that monetary policy will have in terms of growth and job creation.
Obviously, a lot more to talk about, specifically about capacitating the state to actually be able to do its ambitious economic rollout plan via infrastructure. Dr. Abedian, thank you so much. That was Dr. Iraj Abedian, Chief Economist of Pan African Capital Holdings.